the world's #1, the largest provider of oil services, Schlumberger has seen a fairly significant uptick in profits in the fourth quarter. They're seeing revenues up to like $1.7 billion. A really solid uptick. The oil industry at large, talking about cautious optimism. Can we take all of this and consider it at least the beginning of a turning of the corner a little bit?
Yes and no, because sure, this is classic economics 101, right? I mean, because the OPEC came to the deal, which restricted the supply, the prices started to come back up. So what are these rig operators doing? It's perfectly rational. Hey, look, the prices are back up. Happy days are here again. Let's jump back in and start opening up some new wells and start pumping some more oil. But the big fly in the ointment that we haven't really talked about, I mean, we're all talking about Trump, is he is going to focus, I've read his speeches throughout the campaign, on oil and gas. If he's going to focus on any sector, it's oil and gas. He is going to deregulate like crazy. He has said so in his speeches explicitly. He wants to take away a lot of the Obama regulations that made it much more difficult to develop oil properties and natural gas properties. And Peter Terzakian has talked about the growing potential for an explosion in energy investments in the world. And I think that this could be precipitated by Trump's decisions to drive down the taxes and to deregulate this industry in a very major way. This could be, we could see this as the beginning of a major new period of growth, and I'm talking drilling and exploration in oil and gas sector.
Well, and at the same time, we're looking at, you know, the price of oil and trying to forecast it and trying to gauge where it's going to be, with the frackers waiting on the sideline. As soon as the price hits a level where they can price themselves back in, we know they'll come back in and flood the market. So can we gauge this industry and the forecasting of the price of oil the same way we used to be able to?
I don't think we can. And why I say that is, in the last 6, 9, 12 months, when I, along with many others, were trying to figure out where the prices were going, the more I looked at this industry, the more I realized you need to know the break-even point of every major well in the world and every major producer in the world, because different wells and different producers have different break-even points. You know, some are at, like Saudi Arabia, at $15 or $20 a barrel. Some people in the Midwest, the American Midwest, and in the oil sands are at 50 or 60 or 70. And so all these different companies have different break-even points, and that determines when they are going to sooner or later exit the market, recognizing that they also have fixed costs that they have to cover. So I think you'd have to have a gigantic computer with enormous amounts of data on every oil producer and oil well, their fixed cost position, as well as their break-even, to be able to come to a much more trenchant understanding of where the price of oil is going. And a lot of that information, of course, is proprietary, and we can't get at it as outside analysts.
I've only left about a minute for us to talk about General Electric. That sort of matched expectations, but the growth that it saw in renewable energy investment was kind of what stood out for me. What do you make of this?
Yes and no. If you look at it, yes, they did. There's no question their renewables took a big jump in terms of their revenues. And you look at the oil and gas, and it looks like, and they did go down in the last, I think it was the last quarter. Having said that, General Electric is doubling down on their oil and gas. It's a very promising and very important part of their company. So this, again, is an example of what Peter Terzakian was suggesting in the Globe and Mail yesterday about this oncoming clash between two competing fuel sources. In other words, the renewables on the one hand and oil and gas on the other. And General Electric is doing some very classic strategic straddling, because they're doing both. They're investing in renewables and they're investing in oil and gas. So they're covering their bets by going after both.
Well, we're covering our bets by having you. Ian Lee, it's always a pleasure.
Thanks, Peter.